In this video, I'll be covering 5 stocks that are about to be moving largely on earnings, and you're going to really want to tune in to find out exactly my plans for how to trade them. What's up, ladies and gentlemen? It's your Patrick CHWY of the Support Zone, and here we're looking at Restoration Hardware. Restoration Hardware is about to gap on earnings, and what's really interesting about RH, if I zoom out on a big picture scale, this stock has gotten absolutely slayed. It was at $730 a share and is down here at $262 a share. Remember, this company, they make lamps, and they're going to be having earnings. So my big question is, will a lot of people be using high-priced lamps in a recession or an inflationary period? And I think my answer is probably not. So I do expect Restoration Hardware to either gap down or gap up very small. If it gaps up really anywhere below 288, I'll be looking to fade. These are going to be two very strong prices on Restoration Hardware, simply because we do have a bull candle today. So if we gap up into those levels, I will be watching for it to sell off. Here's a little bit of a double top action. So if we gap down, open 250 or lower, we're going to get absolutely decimated, and we'll trade down to 230 pretty quick. Now, if we do gap down really hugely into this 226 or 220 area, we'll probably have a small doji, and not really a lot of movement will happen or transpire after that, is my best guess. Before we dive into some stocks, the broader market perspective, this is my drawing of what I thought the market was going to do about a month ago. So far, we're pretty close. And this exact movement here, we're going to watch today's doji play out the next 2 or 3 days. I do actually expect a small bounce higher out of here, and then a real good decoupling in the next few weeks. Again, that's just a guess. This was drawn a month ago, back on the 4th of November. So we'll find out if we do break lower. If we do break lower, we have a nice little gap down here to fill, and the overall trend on the broader markets is, as of right now, still primarily bearish, at least for the Qs. I did hop into a short collar on the Dow Jones ETF, which is the DIA, which involves selling stock short, buying protective calls just in case, and selling a put. We do have a phenomenal 10 EMA setup here on the Dow Jones ETF, and if this breaks lower in the next 2 or 3 days, I think it's a fantastic opportunity for some short trades, even if it lasts 2 or 3 days. Some other stocks I would love to look at is CrowdStrike. CrowdStrike had a very obvious, super easy gap to analyze. On earnings, this was the gap down, and this was also the analysis. Just to pull it up so you guys can kind of see beforehand, if you get a chance to follow us at TradingView when I post a lot of these charts, you can kind of get these ahead of time. This was the idea. Let me scroll over here. And crowd going lower so this was the analysis right before the actual gap opened up. So I was expecting, based on this amount of volume, and again, the overall trend being bearish, that we would gap down, the shorts would buy to cover, we'd trade up into old support, new resistance, then bang, short sellers would come back in, profit takers would come back in, and the overall selling trend would continue. So if I press play, you'll pretty much see that's what happened, more or less exactly. So at this stage, the big question is, all right, cool, Newsom, all good, what now? And my overall thoughts, what now, is we probably do get a small bounce for a day or two, trade sideways, eventually make a new low of below 108. And then the question is, will we pop back up into there and trap, go into the 10, and then roll over again? And I think the answer is yes. Most likely that's probably what happens. So feel free to take a screenshot of that. That's really my thoughts on CrowdStrike from here going forward. IBM doesn't have earnings, had earnings way back here, but IBM's getting pretty high. International Business Machines. I mean, is anyone buying anything from IBM over Christmas? I don't think so. Now, there are some good breakout signals here, right? We have a good new close. We haven't closed above this price on a monthly chart on IBM since 2018, fun fact. This is a good close. Good close. We're above the 100. We're above the 200 simple on a monthly chart. They did just cross bearish for the first time in a very long time, but all that being said, here's the weekly chart. In the weekly chart, I'm just essentially thinking that we could have a small drop here on IBM. We don't have to do anything too gargantuan, but we are up pretty high. So just look out and keep out your eyes on your watch list for a good gap down or a good break below the support on IBM. just in case we get a chance to make some bear money on a day trade or swing trade. Mongo database. This is a good earnings gap that I would love to talk about right now. That's why we're looking at it. Really beautiful gap up on earnings. Now, this is not many tech stocks right now are gapping up on earnings. This one did. Huge bearish volume. In fact, this is what I'm referring to as a bear shat pattern. This means you have a bear candle gapping up into a bear candle, the second bear candle opening and closing above the prior bear candle's close. Increased bear volume. This actually is an okay gap. I mean, if we take out the high of today, even if it's for a day trade or a super quick 3 or 4 day swing trade, this has some legs to go up. The next real target is probably the 100 simple, which is about 233. And on the weekly chart here, the moving averages, we have room to go into the 20. So yeah, keep your eyes on Mongo database. Watch this one pretty closely. My expectation is probably we gap down a little bit tomorrow, trade back down to this, and then just take out this low. Once we take out this low, it's going to get absolutely pooped on, just shredded in a big, big way. So really keep an eye out for that because we do not want that to occur. And in fact, if that does occur, it's probably going to pull, was it DocuSign? Yeah, it's going to do what DocuSign did when it gapped up over here, had a really nice gap, not quite as bullish as Mongo database, in my opinion. But what happened is we gapped up, we came into the long-term averages, overall bear trend, and we had a very similar candle with very similar volume. Once that broke down, however, and we closed below that low, it just got absolutely torn apart. That is very likely what's going to happen on Mongo database, especially if we close below this lower shadow in the next few days. If not, I think some bears could get squeezed out and we pop for a little bit of a run. Datadog just overall did exactly what I'm just referring to. You had a decent gap up, pretty good bullish gap, good volume in a downtrend, but the big problem is, we have broken below some massive support, and this is a Beethoven size head and shoulders pattern here on Datadog. So generally my expectation is this probably does pull into the 52 level. I would not be buying this one aggressively. I'd actually be looking to short the retest on Datadog, especially since we did close below this big gap up, this big volume on earnings, and just look for something like this to just kind of come into play. Short the rip on Datadog. Costco coming out with earnings right around the corner. This one will be interesting. If we gap up small, let's say we open at 494 up into 500, I'd expect a bull run up into 515 to 520, and that could be a good day trading opportunity. If we gap down and open below 472, I'd expect a selling event down to 460, and anything too high or too low past those levels, and I really wouldn't know exactly what it's going to do. So if it gapped all the way down here, it could get absolutely torn to bits, or it could fade really nicely, so I'd have to watch it pretty closely. And if we gapped up into here, same exact thing. It could kind of retest and then bounce. I could retest and just free fall, but it'd be one of those gaps I'd have to watch a lot closer, and I wouldn't have the exact read on it like I am about to on CHWY. And so anyway, here's the weekly chart. So what you're going to want to do on Costco for sure is mark that 466.85 line. That's the 100 simple on a weekly chart. So on earnings, if we do gap into that price, if we clear it, right, that's going to be a support resistance zone, but just watch that level. Keep this price point right here intact with your earnings analysis and just keep a close eye. So CHWY has earnings, and this one's going to be really easy for us. If this thing gaps down and opens below 38, boop, goodbye. It's going to have a good, strong amount of selling. And if it opens above 46, it really could trap some bears. This one could have a nice little move. So this would be a good gap. There's no real moving averages in the way at all. And this is what I'm pretty excited about. So a good gap down, hey, short it. It's going to be a lot of fun. And a good gap up, let's see if we can play it bullish. Either way, it's going to be pretty exciting. And I'm really excited about taking those trades and doing my analysis on them. Ladies and gentlemen, if you have any stock questions, gap questions, analysis questions, chart questions, let me know how I can help enrich your life. I want to impact you more. I don't think I'm doing a good enough job of it. Let me know how I can help you more in your life, in your analysis, in your trading. What can I do to provide more value? Please let me know in the comment section below. And until our next video, you are absolutely amazing. Love you so much. Bye.